Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a few minutes past 1100 UTC. A really big shout out to everybody joining us live today, as well as all of you watching it on recording. We've been getting thousands and thousands of you watching this live, and even more than that watching on recording. So absolutely blessed to have you all with us, and thank you very much for your patronage. So what are we going to look at today? So typically we set Wednesday aside for our alt request Wednesday. So if you do have any tickers, any instruments, or any pairs, however you know them, do let me know and we'll take a look. We're going to chart them live on the show. We're going to look back across a few that we've been covering, obviously, over the last few weeks as well. We always use the same chart, so we keep ourselves accountable. And that way, you know, it lets us know what the market's up to, what our plans have been, how we were able to execute, and whether we were on the right side of the market or not. Jojo, hello, my friend. Call me Sledge. How are we doing? So, looking at this, I've also now, excuse me, this has only just kind of come across my desk in the last few days. And I want to really deep dive this, but I'm really, really excited by a new project that a good friend of mine's introduced me to called Axon DAO. Now, I've been diving into this. I want to share it with you. So I want to take a look at the chart because a friend of mine who I respect massively in the space said, look, this is right up your street. So for those of you that don't know, from an investment perspective, I was very much an investor before coming into the crypto space, right? Very, you know, not just in technology stocks as well, but healthcare, property, and marketing as well, right? And they're the three areas that I typically really reserve my focus for with crypto or tokenization, for example. Why is that? Because I'm a firm believer that you want to bring a skill set to whatever you're investing in, right? So you want to have a core knowledge base that allows you to be effective, right? So for me, for example, coming from a previous marketing background, understanding, you know, at least a decent amount about the digital marketing space, why I'm so, you know, keen and such a key backer of Alchemy, right? The ADS token, which we cover on here. But there's another one coming up here with this company called Axon DAO, AXGT ticker, which we're going to look at later. And it's coming to a beautiful place from a technical perspective. I love what they're trying to achieve. So we're going to cover that shortly anyway. But if you do have any other tokens you want me to take a look at, and it doesn't have to be crypto, we can look at traditional markets, forex, obviously equities, indices, etc. Please do let me know. Now we're going to come back to this Bitcoin chart in a minute. We are first of all going to look at the key news events. Now I know that I've been going a lot more on about traditional markets recently. Some of you have found that really, really useful, and thank you so much for reaching out and saying that you have. Some of you are getting a little bit sick of it, saying kind of, come on man, this is a crypto show. Look, for me, it's you can't have that narrower thinking, right? Look, you're all welcome to go away and do what you do, but at the end of the day, what I try and share with you guys is not to try and hold your hand through these situations. It's to just share with you what my thought process is with what I'm going through. I pivoted out of a very different background of building businesses and marketing into trading many years ago. And if anybody can learn from the journey that I've been on, the things that I've done, then absolutely fantastic. That's what I want to share with you guys, right? And I think that one of the really big blind spots in this space is people's kind of understanding of, legacy markets, interest rates, etc. However, I know I've covered a lot of that on Monday's show as well, so I'm going to be very light on that today, but I do want to cover this. This is very, very important for me. These are our high impact news events. Robert, hello, mate. Welcome. Good to see you back. So today, Wednesday the 16th, what are we looking at? My focus here is on the US markets, and we can see we got a few beauties ready to hit today, right? So at 12:30 UTC, all right, and that's 1:30 London time or British summertime, we have core retail sales month on month and retail sales month on month. Now, for any of you that want to dive deeper into this, you can go onto our website, thebirdnest.com. You find everything on the economic calendar here. This is the one that I teach off because it gives you these really handy folders. You find out what it means, why it means what it means to the market. It just helps you to really dial yourself in. It also tells you historically what the prints were. You can then go back on the charts, find out what kind of effect that had on the market. Just preparation is so key in these markets, all right? So anyway, retail sales, why is it important? Very quick overview is kind of a look at the health check on the US economy. Are people spending money? Is retail going well? How's that plugging into GDP? Have we got a healthy and stable economy that's going to promote growth? If that is the case, then that's obviously what plugs into interest rates. It's what plugs into inflation, what the Fed are trying to do. And therefore, you want that stable environment that promotes growth. Obviously, at the moment, we're in a very, very unstable environment. The markets absolutely hate indecision, right? And so we're just in a point at the moment that the more information that comes through that clarifies things like the Trump tariffs, or the tariff trumps, brilliant, that confirm the tariffs and give us any more information on policy will be really, really helpful. We need to just remember as well, in the back of our minds, the US is getting ready to refinance several $1 trillion in debt. So when they do that, they are going to buy bonds, okay? When that happens, they're going to print money. And when the money printer fires up, then we typically see, quantitative easing-esque scenarios whereby risk does very, very well. And as Jojo says in the charts I'm about to go on to here, we also have Powell speaking. We've got US retail sales, Powell speaking, and Trump speaking later tonight as well. So we just have this kind of perfect storm of data. Remember that when you see the prints on things like these, the market has often priced in a lot of this based in the preliminary data. So you might not see the biggest jump here unless there's a really big percentage or something that steps outside of the average percentile historically, right? So for example, you might need to see a 20 or 30% missing jobs numbers or in retail numbers for it to really have a massive effect in the market that day. 240%, 5% tariff on China from Tariff Man, dear Lord. Yeah, I mean, at the moment, this thing's just a circus, right? I was listening to a podcast last night from two people I really, really, really respect. Macro Alf, wonderful Italian macro analyst, had the pleasure of interviewing him a few years ago on Congress, and another one as well called Brent Donnelly, who's a really an old school legend in the FX market, and they were just talking about how this is just a complete circus at the moment. You've got some of the highest respected people in both cabinets like calling each other morons, and just the use of terminology like it's really playground level stuff. It's either designed to have an effect on the market. Remember, most things that you think aren't designed to affect markets probably are, right? We don't never really know until it kind of runs through, right? But as we can see here with the tariff war that's going on, everything else, it's just a pain in the backside. Chad, XBT, my brother, really, really good friend of the Nest, fantastic trader as well, ladies and gents. If you don't know Chad, make sure you take the time to stop by, say hello to him and get on his Twitter account. Always dropping alpha, this guy, just such a nice person. Chad, great to have you with us, my friend. So, and Seb as well. Hello, mate. I didn't see you sneak in there. Thoughts on Solana? We can certainly do that. We'll take a look at Sol. Obviously, we'll take a look at ETH as well, won't we? We're going to look at AXGT. We'll take a little look at ADS again, right? Still something I've got a real good long-term view on that as well. And Seb, I was shocked to see OM collapse so rapidly, equally shocked to hear the historical price manipulation as well. We still need to wait to see what kind of plays out with that. I'm somebody with these informations. I'm quite an impulsive person, but I really have to remind myself not to be, because we really just need to decant everything that's going on. The team that, you know, are getting all the information that's coming in from a fundamental side. You've got people like Zach XBT doing some great deep dives, you know, into it as well. So when the dust settles, I think we'll find out. There's talk about whether it was the owners, whether it was mass liquidations, etc. However, what it should really kind of note in people's minds is risk management. And for that, if everybody can just get themselves, or anybody that's interested, the whole team came together when we saw this, and we just put together this amazing risk document, right, telling you how to manage your risk through these situations, whether you're looking to invest, whether you're looking to trade, everything you're looking to do. You can find that right now on the Burb Nest Twitter. All right, it's completely free guide. Please do read it. It's been put together by a team of professional traders, fundamental, systematic, price action, etc., as well as a community and team that have been here since 2017 just in the crypto space. So we put that together because we really want to help you guys kind of avoid any things like this last time. Some things are black swans that can't be avoided, but others are. And one of my main experiences in these markets, and this was, emphasized to me by the great Larry Williams, which was, there are a lot of good traders out there, but there are very few exceptional risk managers. And the best risk managers are often the most profitable people. All right. So there's the red folder news for the day. Let's be aware of that. Obviously, as we head in tomorrow as well, you can see we've got unemployment claims and we've got the Philly Fed manufacturing index as well. So further ado, we managed to get that wrapped up a little bit quicker for you all. So those of you that enjoyed it, hopefully it was still as useful. And those of you that want to be a lot more crypto heavy, hopefully it was succinct enough. Now, moving back to Bitcoin, I've got this on the 4-hour chart here. I'm going to backwards rationalize Bitcoin today. We're going to look at it on the lower time frames and then kind of step ourselves back to the higher time frames as well. All right. So we're going to just kind of get a little gauge on where we are at the moment. All right, so this for me is a key area of support. We're going to cover this on the daily, but this is an inversion gap. We look for these gaps to reject price, right? So when price, this would on a higher time frame is a bearish gap. When price finds rejection here, lovely, that's what we want it to do. Ultimately, when it closes above it on the relevant time scale, so on the daily, not the 4-hour, then we look for this area to hold as support, violate it again, and we expect a deeper move. So looking at this at the moment, we're kind of saying, all right, look, we've got the daily order blocks here, which are being respected on the way up. Haven't seen this retested yet, which is why I was talking about the level down here on Monday of 82,587. And also we're looking at this swing low in here from the weekend, right, which is 83,027, being a really key liquidity pool. Now, we can see basically what's happened here. We've had kind of not really the biggest displacement move up. This really gave a lot of encouragement. You see this large body candle leaving this gap between this wick and this wick, shows you that there was a failure in order pairing because the market was moving quickly. The market loves to rebalance these gaps, allow buyers to step in here. And lo and behold, if we use our inversion methodology here, this is where we got the inversion gap. I'll do it in a lighter color so it stands out. So when price moved above, look how it retests this area and ultimately searches for liquidity higher up above these highs and ultimately these equal highs up here, which we're looking for. So what are we looking at now? Well, quite simply, conditions for me here, I'd like to see these equal lows get taken out, this low here and this low here. You also have this low sat in below. And then we have the order block here. So there's just a lot kind of drawing price lower here. If price continues to move lower, then what we look is for these up close candles to be respected, right? These then become our order blocks. This is a high probability order block because we've swept liquidity from a high, prices close below these up close candles. This area here becomes an order block. And then to add just a little bit of extra spice into this area then becomes a breaker. All right. Some people will take breakers from wick to wick, others from the low of the body to the high of the wick. For me, I'm just looking at it as an area to add confluence, right? And if I know I've got possible resistance here, let me just make that red so it stands out. I've got resistance from the order block here, and I've got resistance from this potential breaker. Then until we get above these, then I'm figuring that price could do something like this on an intraday basis today, come into this area, then look to sweep these out. What we do from here, we then gauge with the price action that's available to us. But ultimately, if we get a daily close below this again, then these lows down here are very much coming back into play. So Let's just kind of move this back for a second, shall we? Right, what I'm going to do is I'm just going to highlight all of this, and then we're just going to pop this into a quick group, just so that we can have a slightly cleaner chart as we look at it on the daily. So, well, let's go to the weekly first, get our very highest time frame now. Well, I know we've covered this a lot. This was a key area for me. This was the top of this consolidation. Yeah, price had this lovely rip up into here. What did we do? We set this range, pinging around in this range. We got that beautiful breakout from it here. This kind of area, it's just a rough area based on the absorption of these wicks. When that was closed above, price ran really hot. So if buyers stepped in so aggressively here, revisiting this place for me would present potentially very good buying opportunities. Okay, so that's what I want to look at. The other thing we can look at here is obviously we need this week to close, but that would then make that a swing low. Until then, it is still obviously a weekly low. Yeah, so key liquidity pools here. And again, what we learn from these is how price reacts. So when we look at this one here, when that was across, when price closed above here, we expected relief higher. Okay, when price came back down to here, closed above here in the last week, what did we say? We expect price to expand higher. Our initial target always becomes the prior week's high, yeah? Or our PWH, as you will see them on my chart as well, all these lovely annotations. Right, so then what we do is we're just saying, okay, well, ultimately, what's price currently doing? It's in a downtrend, okay? We've set a high, we come off a higher low, higher high, yeah? Now we've got a lower low, and we've set a lower high, yeah? Price has come back down below this low, but it's failed to displace or close there. So for me, while we're reacting at a key bullish gap and we've got support below, I'm not saying to myself, yeah, this is actually now the weekly market structure break to the downside. I need to really see some impetus here at a close below. If we hold this and come back above this high, it's invalidated for me and I'm a lot more neutral, okay? Neutral, leaning bullish, as long as we kind of hold these areas here. The other thing that I would want to see is price close above this. Why? Because the down close candles after sweeping supply here, yeah, after sweeping, the low, price comes into this area here, expands up. A close above here would make this a bullish order block, these down close candles, and then I would look for price to move higher. In the same way we were looking at these up close candles, obviously. Price closed below it here. Yes, we had a large wick buying up. You can go back, check the Twitter profile, you can check all the reports that are on the bird nest. I did say that even that small close there has me suspicious, even though this long downside wick is super bullish because of the absorption. If we get short plays from here, I will gladly take them. And we did. I would want to see a close above this as well, right? This down close candle here, closing up. And then I think we get progress higher. However, we don't have that at the moment. So we just want to be a little bit cautious. Now, we get a lot more information here. All right, we can see how price swept the prior week's high, yeah, which was here, which actually set on Sunday. Then price has sold off. All right. And we actually yesterday closed a pretty ugly or consecutive, pretty ugly bearish pin bar candles, right? Or inverse hammers, shooting stars as well, I think. But anyway, as we kind of look at these here, we're saying, well, price could be coming down to retest this order block. We never got a retest of this area. And what I said in the Bitcoin report on Sunday was it's a very, very dangerous area to go short in any kind of swing positions, right? People thinking this is an overextension because when we take out this high, we don't know if price is just correcting down to this order block or to retest this gap. Again, remember, neither of them have been tested. We looked at that on the 4 hour. So, you know, maybe intraday shorts from here and lower. Love that. Had some great trades come out from the team yesterday based on these parameters on other tickers, on alts as well. Again, showing weakness, deeper, faster corrections. So they printed. But what I would say is it's just not the time here. There's not enough bandwidth for me in here to take that risk, not when the upside risk is here, okay? So at the moment, I'm just being patient. And what we can see is price is 1, 2, 3, 4, 5, just in this range. Yeah, basically just, you could almost kind of say the high of that candle and the low of that candle are compressing this into a range. So what we want to see are the lows run and a good reaction here to trade this higher, right? Or another rejection of these highs with, you know, a large body candle closing below. And I think we move down deeper into this area, but we would again get to take those short positions from either here or here if we get the triggers, right? Not just blindly shorting these, obviously. So that's where we are. Just a reminder on the 4 hour as well, we can pop these back on. This kind of plays in nicely with that theory, doesn't it? If we're looking for the lows to be swept before a move higher, just because we're bearish here doesn't mean that we're not looking for long setups from key areas. I just like to see a rejection from here because we have a lot of confluent resistance to drive price down into these key liquidity targets here, which are begging to be swept. Why is there liquidity down there? Well, people that were long here, their stop losses are here. We had this consolidation before price printed a higher high. So that's where buyers stepped in here. And currently, this area here is what's supporting price as well. So while we're in here, a move up to here and then any rejection here showing weakness, you just got to ask the question, why are we showing weakness? If we fail to sweep this low and we pump higher, that's a great sign of strength. In traditional markets, we would look at that for divergences between, say, the S&P 500 and the NASDAQ. So you would look for, like with this example here, you would look for the S&P, for example, because they're correlated pairs. You would look for it to have printed a higher low, yeah, like this, while on ES, for example, say we had a longer downside wick here, you would see that it had printed a lower low, right? Meaning that we would then look to trade the stronger of the two assets, yeah, because it didn't need to take that liquidity pool, meaning that the buyers are already starting to step in, okay? So maybe it's that, but either way, price starts establishing itself back above here, then I'll be happy to jump on board and take some long positions higher. Until then, we do still need to be cautious. Had a brilliant chat with Follish yesterday as well, and all the other amazing guests, TWX Capital, and all those people that were on Crypto Town Hall about this, and such a good amount of alpha shared on there. So big shout out to kind of Scott Melchior, Mario, and everybody that puts that together. It's a really, really good show. So where does that leave us? It leaves us with a really clear plan on here, which means that it's a little bit tricky for our positioning on things like Solana, right? So I know that Seb was asking about Sol. So actually, let me just, before we go on this, let me load up the chart. Let me take a look at the questions. Sorry, I see that we missed some. Seb says, is the 9 trillion debt that the US has to refinance this year needed on a certain date, or does the US government have flexibility to choose when to issue bonds? Jojo says, I don't know if it's changed, but 6 trillion of debt will come due in a month's time. Yeah, so as far as I'm aware of it, they need to do it by the end of May, I believe. But I know it's a Q2 issue for the refinancing of this. I think it's 6 or 7 at the most, but in and around that kind of level, right? And it's, deficits, and they're looking to refinance this. When that happens, they are going to want bond markets as low as possible, right? I particularly look at, and not just me, I get this from obviously economists and that as well, looking at the US 10-year here, which we'll just quickly go on to. This is the key battleground here. They're going to want these down back in the 3% area. Bonds had a big rip here. Obviously, bonds are kind of affected. We look at them as a flight to safety for investors because, in times of turmoil, it's, you can get these good yields here on bonds. 4.8% here when you've got shaky risk market conditions and you're getting paid 4.8% a year to hold these bonds, right? So it's a really attractive offer and a way that you can get a good return on the balance sheet without really doing too much. Down at 3.6%, for example, right? Then you're looking at a slightly different scenario where, it's a lot cheaper. If they imagine refinancing $6 trillion worth of debt at 4.5% when you could do it at 3.8% or ideally even lower. So I still think that we want to see this bond market move down, and there will be every tool and trick of the trade will be used by Trump to get that done, as has been happening with the dollar. The US wanted a weaker dollar. There was a massive attack taken on that. Trump's, that's why a lot of people think he's just this big brash idiot, right? And I'm not disagreeing with those people. I don't think he's a good human being in any way, shape, or form. But I think that people kind of overlook the point. People are saying this is all tactics to bring to the negotiating table or blah, blah, blah. No, look, you need a weak dollar. Too strong a dollar is a massive problem for the US in terms of trade, in terms of all kinds of issues. It's also the world's reserve currency, so holds a lot of strength. The bond markets need to chill out a little bit as well in order for them to refinance the debt. So that's kind of the situation that we're in, really. And I think there's going to be more market manipulation that we need. Obviously, Trump's already putting pressure on Powell to cut rates. And that's going to be really interesting because we have FOMC in May. So we're going to obviously have all eyes on that. Jojo, May or June, somewhere there. Yeah, exactly. Need to refinance around Q2 between May or June. And again, yeah, Jojo just said there, FOMC is early May. So it's interesting. Yeah, and actually one of the things that we were studying, Seb, was looking at the correlations and looking at, say, like, like JPY, which used to be, the dollar JPY, that used to be a good kind of risk proxy as well. Looking at how gold, it just continues to tear faces. Obviously, the VIX is up again today. We saw incredibly heightened levels on the VIX here, up to, I think it was about 60. Yeah, it was 60.17. Really, when you're looking at this, risk tends to do better here on the volatility index. If I just move this to, let's say, a 4 hour, so we've got a bit more data, and then we overlay the price of Bitcoin here. Yeah, quite simply, VIX really falling off here. Price of Bitcoin does well. Yeah, VIX falling off here and holding down here below the 20. Look how it allows risk assets like Bitcoin to breathe a little bit. Then we see here, look, when it peaks its head above, what happens? The price really starts to fall off. These early peaks, warning signs, we can see these here, that the market's starting to get overheated. Price ultimately then sells off, right? And this is all to do with how they're reading the options contracts and forward planning this for volatility, right? So then here, sell off, price increases. Obviously, what you can see here, as soon as the VIX started to really pump, we really struggled. And then if we just draw a quick horizontal line here, yeah, that's when the market's got above, held above here. See how price just continued to go down. If we look at it from the other side, when the markets started to when the VIX started to drop off, we had this corrective move here, price pumped a little bit. We move it around for the next key corrective move, which is here. We can see now price is stepping in. So definitely watching the VIX here. Like I said, the dollar hasn't been the most accurate counter correlation for risk assets lately, because it has very different economic drivers behind it. All right. So anyway, I know for those of you who are thinking, dear God, why are you back on traditional market stuff? But it's very important, right? We're now back on Solana, so hopefully you're all very happy with with that. Jojo Basson said VIX has peaked out. Who really knows? Yeah, I'm not sure he knows. To be honest, it's the US 30-year bond has been rising. Concerning though, yeah, definitely. I mean, especially when you look at the, I think looking at the long-term tailwind for this is very tricky, right? I think how this kind of affects the US in the long term is, obviously, there's going to be a big fallout from this as well in terms of relationships and countries now looking to move away from US reliance. There's a lot more talk heating up about moving away from the dollar as the reserve currency. Now, look, it is possible to do that, but it's very painful. For anybody that wants to know how difficult that kind of thing is, it would be much more difficult from this now, in my opinion. But take a look at when, I think it was Nixon, moved the US away from the gold standard. It takes a long time, and there's a lot of turbulence to go through in that. So it is very interesting. Yeah, you're welcome, Seb. Just go on the VIX chart and then use this little plus sign up here next to where you've got the ticker. Yeah, and then you can add any one over the top that you want. You really start looking at those correlations. We'll maybe have a go at some towards the end of the show. So we'll start here on the, I know I've got a lot of crap drawn here, guys, so do forgive me. It is a very busy chart, and I do despise busy charts. So let me just get rid of some of this, and we can always draw it back in as we need it, because a lot of this stuff now will be a bit defunct. Just to get rid of the main ones there, right? We can always add them back in. So as we were up here, let's zoom out to our highest time frame, which is the weekly. This was an area for me. Look, resistance on a weekly scale. Price closed above this area here. What do we get? Support. A lot of these leading to very big moves higher. That's why I bought more Solana here. All right, just told absolutely everyone what I was going to do. This consolidation before the rip higher, I'm buying more Solana when we tag into this area, and more Solana down here, which was about 111-ish, that kind of region. So that's it. I've added Sol here. If we move deeper, yeah, and I mean, obviously, down here at $20, and I'm really loading up on Solana. I don't think it's going anywhere long term, but it might be a little bit of a nuclear winter of holding, but I still think ultimately you're getting good value for this stuff as you move lower. This was highlighted as our key targets a long time ago, because these kind of areas of liquidity are often driven into. I did add more Solana here. Why? Because that was a consolidation before the rip. We got really nice. I bought it here. Then we got this dip a lot lower, and then got some fills down here. Price started to rise. Brilliant. And then obviously we've come back down to here. I'm absolutely fine with that, to just average into these positions. It's what I've done for many years, but they're positions that I'm quite comfortable to hold for years and years in terms of a time horizon, right? So I'm not looking to make a quick buck on this overnight. In terms of weekly recovery here, again, very similar to Bitcoin. This is the key area for me. I want to see price close above this. It's 132.82, setting a weekly order block. When that happens and we reconfirm this area of support, I think this is going to, have the potential to really take off. The key swing high we're interested in is 147.46. A lot more to kind of be seen down here on the daily. We obviously had these squiggles here. We were looking for price to trade up into here, rejections. on the way down. So interesting that I was a Solana buyer here, which I still held. Then when we broke down, no point in panic, saying you can come back here, mitigate. Often you return to these areas that are flipped. Yes, henceforth the term support resistance flip or resist support flip. But I didn't. I'm just happy to just keep that because I don't know if this then really starts to rip. I'm fine with that. I just said that I would be buying more down here, and that's what I did. And we had a nice bit of resurgence. Then we come back down below. A lot of people kind of crap themselves here and then sell, only to find it's a deviation and then prices above where they bought or on its way back up. Am I saying this whole thing is going to hold and going to moon from here? No, I'm not. All right. So on this scale, we were looking for, this was obviously the weekly level. We were looking to recover. Look how when price closed below it, retest, price gets above it and then retests it here as support, gives us an opportunity to move higher. Here's our inversion gap. Did we hold it? Yes. Bodies respected it perfectly. Here's the order block we set. So we've just simply been looking higher here on Solana until here, and we didn't bloody take it. Look, let me just, we've seen this a lot on crypto lately. So again, you can look back through the old videos. TA, once we flip this area, looking higher, first of all to this higher, lovely intraday, set this, pull back, still for buying, and looking to hold it to this high, but also this OB, right? This OB that's in this gap here, sorry, had this huge wick through it, which rebalanced it, but it was clearly a key area of interest. That's why I expected that high to be taken and for the gap to not hold it back. But ultimately what happened was those equal highs rejected price, okay? So what we're looking at now is quite simple. We have a nice bullish gap here on Solana. As long as we continue to hold this bullish gap here on the daily, then I'm happy to look higher. We have just closed below this, yeah. So that's an up close candle, making this a change in state of delivery after price took liquidity from these highs, right? So we could be looking at a deeper corrective move, but we never retested this order block. So that's also where I'd be looking. If we close below this, it would invert this gap, but I wouldn't exactly be looking to aggressively short this because we're coming into this key area of support. If I then take a Fibonacci across here, yeah, what I'd really love to see is price kind of dip a bit lower here, just below the 50%, and then reclaim this level. And then I think we could really start to rip here on Sol. All right, so let's have a look. 4 hour, where are we? Right, so we were looking at this. Obviously, this is the daily gap, right? So we've still got that on the screen. This one here, as we just move this across, has just been inverted, right? So at the moment, this was a key gap, supported price here, supported price here. Now we've closed below it. This should be looking to offer resistance. So again, like we looked at with Bitcoin, good opportunity here for price to possibly pull back to this. There was obviously key support through here as well. Look at all those lows, look at the inversion gap, and then maybe get that nice recovery move we were looking at. It doesn't have to get the recovery move. We just need to be aware that we're still, you know, within a daily gap here. So if we go back to the daily, while you're within a daily bullish gap, it can be a little bit treacherous to short. I'm not going to tell you what to do, but it's certainly proven so in my career. So yeah, so that's it. I think hold this. I think we can move higher. For a little bit of extra confirmation, probably seeing price close back above this on a 4 hour scale would tell us that actually this inversion isn't holding. And then we've got these beautiful highs up here. There's some small gaps in this move down. Yeah, but we see here, obviously, Tuesday, this was the sell-off. So we want to be aware of those. But I think if we hold this area, and also if we get back above this, because remember, what do we do when we see these really clear and obvious highs and lows? Yeah, like we did with this one. That capped the market. We never got the close above. If we had, we would look for it to be retested as support and to drive price higher. Now, this is different. We've closed below this low. Immediate offered support straight away. Fine. So that's good. You can dip into this area here. Look for your intraday plays. Now we've dropped below this. Yeah. And now we're retesting this. Back above this, you've got to ask the question, you know, is it now showing strength by stepping back within this small range here? If so, and I'll always think of SC's awesome voice on this, is this the deviation? Price steps back in, yeah, probably a reasonable opportunity to go long here, right? But the safer option would be to wait for the close above the inversion gap here, all right? So however you would look to play that. But on Solana at the moment, obviously look strong. We've seen this really, really big run up here. Just want us to reclaim some key levels. And also just looking at what our kind of risk proxies are here, always trying to gauge, are we in a risk on or risk off environment? Obviously, we want to be in a risk-on environment for crypto. So We look across here and we say gold is strong. That's normally a little bit of a risk-off signal. Silver really following it up today as well. The VIX is higher today. You see that up in the green yesterday. Had that big recovery as well. So we want to see the VIX down really. We want to see the S&P 500. We want to see the NASDAQ. We want to see the Dow Jones represented here by the NQ, which is the NASDAQ minis, the ES, which is the S&P 500 minis, and YM, which is the Dow Jones minis. Look at this, down 1.41% today on the NASDAQ, down 0.76% on the S&P 500, and down least of all here on YM, which is our Dow Jones. Now, it's because of how they're made up between the split of stocks that they have within them. The most technology focused index is the NASDAQ. And we can see, because that's down the furthest today, that really should trigger in our mind that if the technology stocks are suffering, then there's probably a high likelihood that crypto is also going to suffer. The other thing we're going to take a very quick look at, you guys all get access to this for free as well if you want to. It's on our website. Let me just pop this in the chat. Okay. And what you do to access this is just go to the top. I'll show you now. Right, we have our crypto screener here, right? Again, this is where we're looking at weekly, daily, 4-hour. Are you bearish? Are you bullish across the board there? So WCT at the moment getting a lot of attention, right? You can see weekly performance up 133%. What's the change? Up 55.2%. Where's the VWAP set, etc.? What's the volume in the last 24 hours traded? And then you're getting this kind of indication here. Like I said the other day, it's up to yours to interpret this. You're just looking to long the strongest assets typically, and then you want to be wary of the weakest ones. Obviously, no surprise to see ETH, red, 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 bearish, 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 4-hour daily, weekly. But actually what I wanted to look over with you today was the crypto and the stock market heat map. This is a great way. It's how I start every single morning. I start with traditional markets, move across onto crypto, and look, it just gives you a big slap in the face visualization of what the markets are doing. What are the markets doing? Well, markets are pretty red at the moment, right? On the crypto front. So we would take this information secondary, because you can then go back up here to tools and you can look at the stock heat map and see this looks a little bit more neutral, right? But still, I would say more red than green, right? And a lot of grey in here, which is showing kind of more kind of neutrality. But if I want to put this onto the NASDAQ, yeah, and we're looking more at the technology stocks, you can see here Microsoft, Google, Meta, Amazon, Apple, Nvidia up today, but I think, you know, there's other catalysts for that. Then as you look across here, you can see the companies that are taking the biggest hits. But you need to remember with the indexes that it's the top companies that make up these indexes, right? So when you're looking at that for a long time, Nvidia was really propping up, you know, the S&P 500 or the NASDAQ, sorry, especially. And then when that started to go down and they even printed good earnings and that just couldn't support the index. The whole idea of the indexes is that they're a basket of different stocks. So it depends on their combined performance. All right, so when we take a look at crypto and we take a look at these markets and we see that there's a little bit of a struggle here at the moment. However, we have a little weapon in our arsenal here that allows us to sometimes step in, especially on an intraday basis. Okay, and that is the open of the New York markets. Right now you have the pre-market open, which is in about 50 minutes from now, and then the market open, which is in about an hour and 50 minutes from now. Ultimately, what we're looking for there is the real kind of injection of volatility into the markets, okay? So you can see here what we were talking about with the NASDAQ. We'd stepped here into a mother bar pattern. For anybody interested in the mother bar, you can find that pinned to the top of my Twitter profile, all right, on how you trade these. It's basically a pattern that creates two ranges. And until you get clean breakouts, you're basically trading one side of the range to the other. This signaling that when we deviated this, obviously, and failed to close outside, we're favoring shorts down to the low. You then came back up here, deviated, stepped back in, rejected at the midline here, and then prices ultimately now sat outside of this range, yeah, until getting rejected lower down. Either way, we can see today the pressure coming on, obviously, to the NASDAQ and technology stocks. So we want to see a nice resurgence in here, and often the injection of volatility brought by the news events we discussed earlier, like retail sales coming through. That's when you're looking for that catalyst to kind of inject some volatility and maybe push the market a little bit higher. Burnside, get those kids to school, my friend. You right back at you as well, my friend. And always great to have you on the show. Thank you very much for your support. So But, you know, here we are. I know you guys don't really want to be focused too much on this. So let's move back across to Ethereum. It's just a really good way to get yourself set every morning. Have a routine. Get on the screeners. Find out what's going on. You know, get on the heat maps. Find out what's going on in the market. Check the key news events. I'm not talking about Twitter. Scan through Twitter to get a little bit of a feeling, you know, for what's going on. But, you know, use the best sources that you can, right? Get yourself on the Fear and Greed Index. Look for key news events. Use CNN. Use Bloomberg. Use these things to get into. Use good crypto news resources to make sure that you're digesting the best news information. And, you know, like I'm surrounded by, which is an absolute blessing, with people like Chris, Crypto Assessor, and, you know, our new fundamental analyst, Kazi, KZM. I have these amazing fundamental analysts that keep me up to date with this stuff all the time. And as do you. If you're members with us over at the Bird Nest, you get all of these updates on a daily basis as well. If you want to find out anything more about that, I know I don't really plug this stuff, guys, but ultimately, you know, I know the product and the quality that we bring to the market. If it is anything of interest to you, then you can find all the information in the description, or please always feel free to reach out to me on Twitter or X. We must start calling it by its new name. Anyway, let's take a look at Ethereum, right? What's ETH been doing? What's the plan been for it? It's been a massive underperformer, annoying a lot of people. You know, obviously this was the key thing, got everybody wrong-sided for, you know, what everybody thought was going to be the key to alt season. And ETH just massively underperformed. Now, I'm not going to go into the reasons as to why. I bought more ETH here. Again, look, simple. All of my charts will tell you the same thing. Here's the consolidation that led to this massive rip. If the buyers are still there, that's an area I'm happy to be involved. If not, I don't really want to kind of buy again until down around here, the kind of 1200s, or maybe this kind of consolidation here, same kind of area, you know, low to high 1200 region, I think would also be a good buy. I don't think ETH's going away anywhere. I think the world is starting to become more open to cryptocurrency, etc. So I do think that we've got, you know, some good times ahead of us. I don't know if that's going to be next week, or I don't know if that's going to be in 5 years' time, right? Probably not 5 in truth, more like kind of like 2 or 3, depending if we do run into recessionary territory, how badly that is kind of dealt with. But, you know, look, just zoom the heck out on these charts. People that bought here thought everything was over. If you just held here, you could have sold here, or here. People that bought up here, fair enough. I appreciate that. But you're either selling at a huge loss down here, or what you're looking to do, or certainly how I approach it. And again, as long as I've got the fundamental and technical backing for this from my systems, then what I'm saying is, okay, I bought too high. I did that on a number of projects back here in 21. And I sold a load of projects in and around here, right? And some of them even down here. I lost faith in the projects. I wasn't a particularly good investor back then. You know, I've always been more of a trader than an investor. But ultimately, when I did that and then price started to get back to these levels, all I was really doing was then buying higher than I was selling. And I've lost all that money on the way down, meaning I need to get kind of back up to these areas now to regain it. What happens? Most people then buy too high up, sell down here, buy back up here, right? And it sounds like a really simple thing, but you just want to buy low and sell high. You need to manage risk. So within your portfolio, you need to accept, like my Solana portfolio of memes, that made me some great money and then is now so deep underwater that it's floating somewhere in the Mariana Trench, I think. But it was fine because it was 0.5% of my portfolio allocation, which I was just as happy to go and take to a casino and gamble on red or black, except with a much bigger upside in crypto. If, however, you allocated 80% of your net wealth towards that, that was probably a mistake, right? So it's just about learning in these situations so that you're better next time. And for me, this will always be a good buying opportunity. This was a great buying opportunity. I'm really happy that I bought here as well. You know, I bought here as well at the time. I remember this because I know the consolidation after the big drop, everybody was really kind of negative on the markets. We were just coming into this big consolidation where the market's pumped. And ultimately, if we dropped further, I would have then just looked to buy here. All to do with your time horizon, all right? Very, very, very important to understand that. So on the higher time frame thing, this is where we are with ETH. We're down in this consolidation. We've now taken out this low, which I really, really wanted to see. And I quite like this candle. I would have preferred it not to have such a long upside wick and have like a larger body. So it was more of a solid pin bar and not more of a kind of doji type candle. But I still think this long downside wick shows us that buyers have stepped in. However, if we don't have the economic conditions to thrive, then we're in a little bit of trouble, all right? So, yeah, lots of options expiries coming up as well. And like our friend here, Jojo, is explaining to us as well, we get the VIX expiry. So I know I'm kind of covering this all with you guys today. I try to kind of do a little bit of a balance, but it is tricky. If there is anybody that's interested in finding this out, you can obviously find it out pretty easy online, but these normally 30 days before the third Friday of the following month, which doesn't really make much sense unless you've got the context, I suppose. But it's normally on a Wednesday, and you're lining this in with options expiries, right? Because that's how the VIX is. That's how the VIX is measured, and it's a very complicated formula. There's zero point in me running it through with you. Even I wouldn't be able to run it, for example. I understand what goes into it, but from that perspective, I'm using the VIX much more as the proxy of if we're running very hot on that. It's often a very tricky environment for risk. When we see a calm, neutral VIX that's ideally down below 20 or at least below 30, then we typically have better environments for risk to thrive. So let's move on to a daily scale before we kind of get too lost. This is still completely relevant. What did I say on Monday? Where are we? So price coming up, takes the high. If we can't close above that, then we're probably moving lower. All right. And we still need to really kind of navigate this large bearish gap. All right. So at the moment, we haven't got what we wanted to see. Why is this black line here, BC? Black line is there because that was the down close candle. We wanted to see price close above. This candle here coming in on Monday, we wanted to see a strong close above here, setting this as a bullish order block, or this obviously ideally, and then showing us momentum and a move and a close above that high, showing us that it could move higher. Good little bit of information here from Jojo. Based on stats, after VIX reach 60, normally VIX will come back down below 30 as providing no market risk event. Exactly right. I'll show you the chart in a minute actually and how I use that on these abnormally high spikes to play some kind of really interesting intraday positions, because you normally see quite a fast pullback here on the VIX when it gets to those levels, because traditional markets are really watching that, and there'll be a lot of covering, a lot of positioning. So really kind of key insight there from Jojo, and one of those things that you can play in to a really good strategy moving forward, setting your alerts on the VIX, waiting for those spikes to come back above, get your strategy lined up. Does it play in with your TA? Are you at a key level where you might be able to see a pump in risk or a dip in risk off? And then it can really help you kind of take higher probability trades. So what else do we want to look at? Well, there's been a slight kind of move here that I just want to cover through with you guys as well, right? Because we have now swept a high, so we've taken liquidity, and we have now closed below this up close candle, right? So we can get rid of this now because that never met criteria. It never closed above it, right? So you see, wick, useless, need the body to close. We didn't get it. What happened here? Body closed below. What have we done now? Retesting this area and looking to push lower. You know, on a weekly scale, realistically, this is our next one down here. All right. Hey, Lucy, how you doing? So this is our next one down here. We'll make this a sweep line. All right, now I'm not saying that ETH is going to come all the way down to 13.8551, but it very much could do. You know, what I now want to see is price above this. Yeah, so quite simply, just waiting patiently here on the daily and want to see price establish itself above here, close above, hold this area, then we can pretty much run it up into this high that's been created after this one here. Should have done this in a different order, so I had to stop changing between the two, but never mind. All right, so ultimately this hasn't been set yet, so we're going to get rid of that. That's the conditions to turning bullish into these liquidity pockets. First of all, the high within this gap, right, and then close above this high, and then I think we can really start making a run on these highs here around the 1950 area and ultimately back up to the 2100 and the 2127, which is the key high we're looking for. How does this then play into a 4 hours? We decant this back down. What are the early stages that we want to see? Well, we can see what happened. Price closed below, right? Then we got a retest of this, and then during wonderful Asian cousin sessions, they really sold this off quite hard, but we did make it down to a liquidity pool that we are holding, yeah? This swing low. Remember what I said to you, if you see these clear and obvious swing highs and swing lows, look how price reacts. Yeah, this was a good example here as well of one that failed, but the failures can be really key. First of all, if you've got a major external high next to you or low, you should be favoring that, not the internal one, right? Much more chance that key stops and liquidity rests above here rather than here. However, if you were looking at this and this didn't exist, when it closes above, you look for this retest here to offer support. When it closes back below aggressively, you can be pretty certain that that sign of weakness is a deviation and price is now looking for the next key liquidity pool, which is this low. Okay, so that's what we're looking at here. Price is now back above this. Remember, this is on a 4-hour, right? Our higher time frames are pointing to the fact that we are bearish, all right? So we need to be careful because we're technically counter trading this higher. But if price gives us a little indication here and says, okay, I'm going to close your 4-hour or above this, then maybe we've got a little thing and we can start to move into this. Then I become very interested in this high here, which is at 1660.5. Okay, so playbook's quite simple. Let's just pop back to the daily very quickly. Now below this bearish order block, we're still bearish overall, so we're aligned with our higher time frame bias. We're delivering from a bearish gap. We've swept a high and seen a strong rejection. Technically, it means that the higher probability trades at the moment are to the downside. For any early stage moves that we want to see, if we see this get rejected, this up close candle, or another retest into here that breaks down, then we trade this lower, and I would be targeting this low here, which is at 1,473.32. All right. And we need to be aware of these lows here as well. This one actually sat at 1,537.99 is interesting because it's also within a gap, and I quite like these gap lows. They make really interesting liquidity pools. So playbook simple, close above this. We could look intraday for this to push a little bit higher. Ultimately, any rejections here coming back down, I'm now not worried about this low unless we close below it. I'm now targeting this low here, and if we close below that, then I'd look for retests to continue the trend moving lower. Let's not forget that when we're trending down, what are we looking for? We're looking for the up close candles. These two here, price closes below, retest, we sell it off. So what else do we have here? We have this up close candle. So let's see how price reacts at this. If we get breakdown on the lower time frame, and what I mean by that is using something like a 15-minute chart to see price, coming in, sweeping a level, then you want to see a strong move away, displacement. You want to see energy in this move, momentum, gapping. Yeah. Then when price returns to those gaps, you can either use bearish gaps, you can use the structural break line, which I used to call a breaker line, right? Which is basically just the key part of any potential breaker block that sits there as well. All right. Like we were looking at, earlier on the charts as well. Okay, so hopefully that's useful for some people, but that's definitely what I'm looking at around here, especially while or if we see continued weakness here in the equity markets. So that's where we are with that. Now I've got a couple of tickers that I really want to cover with you as well. So this one was the one that was brought to my attention. All right, now this is AXGT. It's Axon Dow. All right, now what's really interesting about this is it's in a sector that I think is just going to be one of the biggest sectors, which is medicine, right? Healthcare, health data as well, right? And that to me is huge. That I think there's massive moves in the marketing, digital marketing, especially for disruption, as well as property management, sales, etc. So when, one of my most respected analysts come to me, and also another couple of people that I know in the space as well, who are super clued up on this stuff, say, BC, we know you love trading these technicals. And by the way, what they meant was, as they're looking for the technical side, they'll often reach out to me. When I'm looking for the fundamentals, I often reach out to them, as well as my amazing team at TBN. And this for me is a real kind of, I love these. Yeah. What's this? This is the high of this consolidation. And again, remember what we're talking about. Remember what I just literally said to you minutes ago. Look for the clear and obvious swing highs. If you're going long, doesn't matter if months or years have passed between them. Yeah. When you look at those levels, look at the reactions. Great reaction here, and that set the stage for that recovery. So where are we now? Well, we're here. The other area, obviously, is kind of if we're drawing this out as more of a kind of consolidation, looking at this here to provide a really good area. Okay, so let me just lock that off for a second. So from a technical standpoint, I love the fact that we're here. Why? Because every time when we engage with this, we've seen these massive rips off the back of it. This is the prime consolidation that led to that massive move higher. So if you've got a good fundamental backing of a project, you've got a good team behind it, there's good investors and everything like that, then you're really looking at an asset, in my opinion, that's worth your attention and is certainly worth some of my capital. So this is the AXGT token. That's what we're looking at. That's what powers the Axon DAO ecosystem. And actually things like access, reward, governance as well, across what's ultimately a fully integrated Web3 health stack. All right, now these are some of the key things for me, and I know this won't mean a lot to you guys, but actually what I'm really looking for in a project is its backing, its investors, if it's regulated, etc. And this is actually backed by FDA aligned protocols, HIPAA as well, HIPAA. It's got a HIPAA ready infrastructure. I mean, it's incredible. 336 NVIDIA, B200 GPUs, 4,000 GPU scale plan by 2027. That is massive. Now, this is the thing that really caught my attention as well. So it's fully interoperable with Google Health, Apple Health, Samsung Health, right? People now are really starting to look at their genetic and their medical markers. This is a hugely emerging market. Maybe not emerging because it has been around for a while, but in terms of its disruption using blockchain and everything, this for me has, I get this. My good friend Macro CRG says this, and he said it in our last Congress, when some things just get you, he calls it the ball tingles, right? You just get this little tingle through you. You get excited and you're not exactly sure what it is at the time, but your instincts tell you need to look into this more. And this is from my side as well. Now, this is the next point that underpins it for me. Is what's the company generating? What's the turnover, etc. This is a cash positive operation with zero debt. Absolutely zero debt, and a huge grant-backed expansion underway as well. Okay, there's live deployments across AI, I can't even speak today. AI, voice diagnostics, biometric wearables, and also looking at the psychedelic feedback studies for anybody that maybe watched anything on Netflix about, what was it called, like how to change your mind and stuff like that. There's huge stuffs with huge stuffs. Really striking. So there's a huge amount of stuff that we're learning about ourselves and the human brain and how that links in with our biometrics, with our medical scores, with our data, how we can use that to control it, to ultimately live a much healthier, longer and disease and illness-free life. So this is why I was just so very interested in this. So just taking it back onto a weekly scale, you can obviously see it a little bit clearer here as well. Just coming into the top of this small consolidation before price popped. Now, if we look at where it is off of the highs as well, down to here, yeah, 91%, lovely. So I just think good upside. I like the structure of this. We're down at a key level here. Companies like that aren't just going to go away because crypto is being threatened. They've got great integrations with massive companies, huge traditional market potential as well. So I'm really excited about this one, guys. Just want to kind of give it across to you, as well as our ADS token, which I've not been secret in kind of saying this as well. I won't be. I just give you my opinions on the market. I don't shill anything. I don't tell you to go out and buy anything. I'm not somebody that was recommending stuff to you that I don't recommend myself or have an area of specialty in that I can overlay to give me a slight advantage in this. And again, ultimately, this is not financial advice. I'm not telling you what to go and buy. I'm telling you what looks really good for me. We can see this here with ADS holding this area of consolidation, which is just where, stacking bags back here. And we saw this massive run up, which was just amazing, and 100% exposure. I didn't sell any of it, right? And I bought aggressively back here again to show you this on the daily. This is what we were looking for, right? This for me is such a key level. We thought we had this little breakout here, dip back down, but this is what we were looking for, right? Initial rejection. See this line here. You might not be able to see it because it's there, but let me make it a bit bigger. This is what we were looking for. Price to run out these lows. We finally got it down here. Then some kind of impulse move higher, followed by a breakout of this area. So just looking for this to come down. Since we've added this line in here as well, which is the key resistance, we can see at the moment we've seen a rejection here. That's absolutely fine, because this could then just quite comfortably be the lead into sweeping out all the remaining liquidity under here before we look for something like that. So a good kind of safer investment point would be as we see this breakout and we see the retest of this level, or even, more so when you see a full structural break. What do I mean by that? Well, what you want to see here is if you're coming off of a lower low, you need to see a higher high and then a higher low, right? So you got the low, higher high, higher low. Ultimately, it's that level there that you would then look to become involved in the markets. This is a more aggressive entry because you've only shifted from a lower low to a higher low. So it depends what your kind of risk tolerance is within here. But that's what I'm looking at on ADS. So for those that don't know, it's a company called Alchemy. They've got partnerships with Goliaths like Coca-Cola, for example. They're going to be a massive disruption for the digital marketing space, and they're absolutely ripe to rip this. So again, I love the fact that it kind of plays into what I understand about the space. It's something that I've got kind of previous history in that I can overlay. And advice that I always give to people that say to me, how do you kind of pick out projects you're looking to invest in, crypto and otherwise, when there's so many? And there are. So use any advantage you've got. Maybe you've got experience in the aviation industry. Maybe you're somebody that's really into cars. Maybe you're somebody that loves Pokemon and collectibles and all these other things. Just find projects that tie in with that and use your knowledge base to tell you, does this sound right? If I was a collector, would I want to do these things? If I was looking to kind of make space in the aviation industry, would I do these things? Has this been done successfully by companies in the past? Is this an area that looks like it needs disruption, or is it working very, very well? Is it very healthy? Then you can just add like a little bit of an extra layer. Lucy, thank you so much. Oh, love you. Sorry, they should be on. For some reason, YouTube keep turning these off. Let me make sure that they're on for you guys next. I do apologize about that. So we need YouTube YouTube. We need. Actually had Patreon last week as well, who had a similar issue, and we thought we'd fixed it, so we'll get in contact with them again. Subtitles, there we go. Made a note of that. Hopefully Jojo makes a good point here. So hopefully afterwards they're added by YouTube, but do reach out to me, ping me on Twitter, anything you want. We'll make sure we can find you a transcript somewhere, but we'll try again to see and make sure they're ready for the live show. So it's just gone 1 minute past. I'm gonna have to fly off, grab myself a quick sandwich, because we are in 14 minutes from now going to be live with members over at the Bird Nest for our live trading session. We're trying to break through the 100R return. We've been doing it for just over 12 months now, and we have got ourselves, I think, into the 90s, about 91, 92 R. So we're going to be back there live. We're going to look at a few crypto assets, but we also cover the NASDAQ and FX. So if you're interested in that, do pop along and take a look. Aussie, absolutely. Need to add a feature to YouTube to translate my Britishisms. I love that. Brilliant. Well, you should try me. At least, I'm not really drinking that much anymore, and I would never drink in the day. But when I do occasionally have a little bit of sauce in the evenings, I can return a lot more to my Essex and Cockney roots. So then you really need a translator. All right, guys. Look, almost 3,000 of you live with me today, or with us. We're always a collective here, right? We all want a better future for ourselves, our loved ones. So thank you so much for giving the time that you give. I appreciate every single one of you, as does the Bird Nest. If you've got any questions, do reach out to me. As I said, you can find links and information in the description. Make sure you're making the most of the website as well. There's a ton of free resources on there. You don't have to sign up for a thing. And as a little hint, we've released a risk guide today to help you navigate these markets moving forward, written all by professional full-time traders and a whole bunch of experience, including Crypto Burb himself. So hopefully that helps you get back on track. And off the back of it as well, the fact that so many people are kind of hurting with these current conditions, I think we've got a 50% off promo on any of the paid memberships, mentorships and bits and pieces. So do go along and take a look, or happily read out. Call me Sledge. Always great to see you here as well, my friend. Jojo, everybody, Lucy that was with us today, Aussie, all of you moving all the way back through the chat. So many of you. Apologies if I don't mention you, Seb, as well. It's great to have you on here with us. Who else do we have on here as well? Burnside earlier, who's had to shoot off to work. Robert, Erica, absolutely everyone. Brilliant to be here with you. Have a fantastic day. I'll be back with you live on Monday. And for the rest of you, I look forward to seeing you all around the nest.